Hi guys, we're back with yet another video of MNQ post breakdown market analysis. We get right into it. As you all know by now, I start watching my charts at 7 a.m. EST, New York time. We have the previous day high, the previous day low marked out on the chart. Now we come on to the day. When I came into the market was already in a prior channel. As you all know, for there to be a channel, there must have been a breakout, because only after a breakout mode do we get a channel. As you can see, a tight range is also a breakout. So this was essentially the breakout mode, and this became the tight channel. After the tight channel, as you guys see, if you extend the channel further, you see the price actually broke out, pulled back, and then had a continuation. Now, if this continuation were to last, like, I would look for further longs further down the line, like looking to here, but essentially the continuation had a strong bear bar, pull back, and then another leg. Now, this was a very small, if you look at it, it was a very small two-leg pullback. And if this were to succeed, that means the price would go on to make a further higher high. It would go here. But essentially, since it did not, and price made a higher low right here, I was looking to short the market. And my ideal scenario, my first target, as you would call it, would be this: the low of the channel from where actually the breakout mode failed and the channel started. So I actually entered a short right here, one tick below this big bear bar. My stop loss was above this, and I was looking for a 1 to 3, 1 to 4 risk to reward, essentially to the level. It was a 1 to 3.83. Otherwise, I think it was a 1.4. I think I'm like marking my levels out wrong. I think my SL was right here. It was a 1.4 risk to reward from what I remember. And I took this trade and I exited it right here. Now I was further looking for setups. If you start, like, if you leave this out and you start looking what happened after that, essentially the channel failed, prices came back near the breakout mode from where the breakout mode started. Now, since this is a new trend forming right here, you would call this right here the breakout mode in the bearish side, and then you would call this a tight channel in the form of a breakout mode after the breakout mode. That means, now, tight channel formed. Now essentially, if this were, like, if this trend were to last, right, price would come here, pull back, and then form a wider channel, and then form a range from it to reverse. But essentially this became a bear flag reversal. So this is the last flag kind of pattern. When I saw this bull bar right here, this big bull bar, right, I wanted to long, but I actually, you know, I really wanted to long, but I wasn't entirely sure of the direction of the market, so I didn't long. But after that, when the prices had moved this high, so the this became the new breakout mode against the trend. So this was the new breakout mode. Now after the breakout mode, we obviously, as usual, we see a pullback, and we saw this pullback, a two-legged pullback, one leg, two leg, and failed to reach further down, which, as I've said like at least 5 6 times in my videos, this became a high to set up long. This became a high to set up long. You could draw a channel right here if you wanted to, like, you could look at it as a channel right here. Now essentially you would ask me that why did I take the trade even though it was in a channel, and most channels break out? Because after this bullish, after this bullish bar and the bear bar not able to fail, I was expecting that it will sweep above these levels, like it will make a new high of the day. So that's why I wanted to long here, and I took another long position right on the end of this bull bar. Actually, I didn't even wait for confirmation in this trade, because, sorry about that, because the bull bar was so strong, I took the setup and it was a clean high to setup for me. And then again, I didn't look for a lot big trade, but I wanted a 1 to 2 risk to reward, so I exited on a 1 to 2. That's it. I could have stayed longer, probably could have made a 1 to 3, I think. Yeah, I would have made a 1 to 3, but I did not want to risk it, since I could still expect prices to move below this and form a trading range kind of structure. So essentially I did not do that. Now this, if you look at it, now what would you call this entire thing? Now, you wouldn't call this a failed breakout. You would call this a breakout. You would call this like a proper breakout, because the prices did break out. It was strong enough. It continued for a, for a certain time of period. It did continue. And after that, if you look at it, it also did make a channel. It made this channel. It made this channel. This was the tight channel after this, which tells you that the breakout was true. And after that, if like when the prices came here and broke the channel, essentially you could have still further longed here for a further long, but obviously I wasn't trading by then, since I only trade till 12 o'clock. But this was my understanding yesterday of the market. Yesterday, if you were like in any direction of the market, you would have ideally made money. Like that would have been the thing. If you were trading any direction of the market, you could have made money. There are days like that, even though it was strong uptrend day and outside day. Okay, see you guys next time. Like and subscribe, and if you have any questions, let me know in the comments.